Hello everyone, and welcome back to our special weekend edition of the markets around the world, including stocks, commodities, and cryptos. The last week was one that certainly caught some people off guard, but luckily we were pretty bullish due to some of the big transactions that we saw going in under the hood. Basically, there was a short squeeze on, and that short squeeze led to massive gains on Fridays across multiple instruments. But is it too little, too late, and are we only going to see a little bit of a move? A lot of people have been correctly identifying this area here as what we call an inverse head and shoulders. Left shoulder, head, right shoulder. But if it is a head and shoulders and you take a normal distance, guess what? The actual distance from the neckline ends up filling into that last gap. So is this all we have this week and then we start selling off again, or is there a little bit more in this potential pump? Most people are calling it a dead cat bounce out there, and of course, there are reasons why. We'll be taking a look at all the markets now and breaking down some of the macro and, of course, the charts for you for the week ahead. See you soon. This will be a good one. Well, welcome back everybody, and I think the best place for us to start today's video before we get into what happened on Friday and of course the macro data is by understanding one of the big reasons that all of this happened: rebalancing. For anyone that doesn't know, big funds have to rebalance their winners and losers, and the Russell rebalance occurred, and of course there were some big losers and some big winners over that period, which caused massive volume to go through the markets. If we take a look at just even the larger 500 companies here instead of just the small caps, you'll notice across the board it was a sea of green, with really short squeezes also coming in thanks to the amount of liquidation of poor retail traders out there that really got hit over the last week. And of course, we do sympathize with everyone out there that's had those things happen to them. This has been a brutal year for many people that aren't informed about risk parameters in this market. Let's talk about the NASDAQ though. We'll look at this and straight away you'll notice that it's up 3.49%. It was the best performer. We've discussed now for really 2 weeks how the market's been rotating into growth stock secretly and undercover. And we'll show you today how you can use some charts in your charting techniques to really start to see this in the future. Some nice ratio comparisons that really help you out. But 3.49% from the NASDAQ, and of course this meant that some things like semiconductors and technology were some of the best performers on the day. Metals also ripped back in. XME heavily sold off the last few weeks. They really basically bashed down energy and metals as we saw a lot of destruction of those prices, and they did have some bounce and a little bit of a reprieve rally on the Friday session. So let's talk about a little bit of data here, and let's go through one of the big key things here, which is weekly arrows indicating a weekly change of 5% followed by another weekly change of negative 5%. So we tend to see a lot of rebalancing occurring during this period. Usually it's to do with short squeezes, and you'll notice kind of those big negatives that happen over here often turn into be low points. Now they're not always, but if you look through history, this is a turning point in markets. And that's why we were talking about it in the previous week and saying, look, there's a high chance and a high statistical chance that the week would be bullish. Will that continue through though? Well, it seems like dips at this stage may be purchased by the street just due to the nature of the move here, and also the nature of the sentiment in the market. So we always go through sentiment reports every week on the channel. Always subscribe if you're interested in getting some of these reports. And you'll notice here that the general sentiment of big or basically retail investors out there was negative. So it went from being 37.1% on the 1st of June, bearish, to 46 to 58 to 59. So as of the 22nd of June, most people were pretty bearish on markets. And that is important because, of course, what did we see turn around at that point? We saw the market stabilize, turn around to go bullish. Again, just showing how Wall Street's so good at creating fear, then trapping retail traders, and then, of course, switching it to the positive side. Another thing that has been, or at least has been very interesting, is the massive sell-off that's occurred now since July of 2021. Basically, Wall Street and all of the big hedge funds have been net sellers or at least net reducers of their book since July of 2021. We've now hit a pivotal point here in the markets. And as promised, I said I'd update this number. So let's have a look at how it looks as of the close in terms of the data that we have so far. You'll notice asset managers are still coming in pretty bearish here on markets. And there was a small shift in the net long position, I can tell you, last week. Obvious once you see it in the markets, but we haven't seen a sustained net long position for a while. And that's something that I think most investors, and continue to watch the channel even if you are an investor or a trader, this is going to be one of the things that we need to look at for real turnaround stories. To know that the bottom's in, you may actually not necessarily know at the bottom. You're probably going to see it happen over time, and you'll see these big traders start to pile back into the market, similar to what they did back over here in 2020 into the beginning and middle of 2020. That was when we started to see these guys turn around. And of course, that's the time that you really say, okay, it looks like the bottom's in, the big money is flowing through. Back-to-back weekly declines of course, 5%. We talked about that. We said the next week is usually positive. It was. The next month also tends to be usually overall positive. So again, this could be the beginning of what people technically call the dead cat bounce. But let's get stuck into the actual technical analysis. Let's go through some of the key levels. We'll begin with the top-down environment in terms of some of the important things we should be looking at. Then we'll get into a couple of stocks, indices, and of course, we'll finish up on crypto. Let's talk about the elephant in the room, and that is the Japanese central bank. They continuously try to stop the rate. They're basically going anti-inflation. So they're trying to keep deflation, and they're forcing trillions of yen into the market to stop this from happening. So you'll notice another huge blowout here on the Japanese 10-year bond. If this ends up break, think about it as the dam's breaking, and currency markets might get wild for a while. So if you have been trading Japanese yen, maybe consider what you're doing there and consider your risk management, because this is a chart to watch over the next few months. If you've never seen it before, go and have a look at the Euro Swiss, go back to, I think it was like 2013, 14. Take a look at it on the charts and you'll see what happens when the dam breaks. Let's move over to the second yield and we'll talk about US 2-year. So we know that the US 2-year is kind of controlled by the Fed, but the market's obviously trading it in the future of what they believe. We have had a drop of the US 2-year. What's that caused? A bullish sentiment run in the SP 500 down here. Obviously, when the 2-year goes up, the SP 500 doesn't like it. They're pretty heavily correlated together. So for the week moving forward, you really want to see basically a new low being formed on things like the US 2-year and 10-year. And if that occurs, of course, the rally for the SP 500, NASDAQ, etc. should continue. And at this point, it looks like the NASDAQ would be the strongest of those pairs. Let's move over here to the US dollar. What's going on there? Well, we've been a little bit bearish on this recently. Flows of money are all over the place because of the yen situation. So it's a tough one to trade for sure. But we do have a low here now that's formed 1, 2, 3 times. And it's in what we call a technical turnaround on the 1 hour to the bear side. So at this point, maybe this 104 kind of area will be interesting for currency traders. If it moves down, of course, that will also push through a few other pairs, and one of those will be gold. So gold may do better. Gold's holding as best as it can. It's really trying to hold up there. I did a bit of a survey of the community, and a lot of you were liking gold right now. It's okay on the charts, but it isn't really doing anything that spectacular at this stage. I will tell you, and I'll bring this into one of the videos this week, we'll talk gold a little bit more length, because while most people out there on the channel, some people don't like it, it does have a seasonal strength that comes in July. So we'll have to find out whether the market, real linchpins or whatever you want to call it, the big asset managers want to buy up gold. This would be the time that they tend to do it. And also it may make sense for them to tend to do it as well, with potentially even the lowering of the 10-year and the 2-year. This is the key level we're looking at this week, 1846. It's been defended now and sold 1, 2, 3 times. So a breach above that will be a big deal. And really, you don't really want gold underneath 1810. That would be pretty bad. And the bears would come out to play with this. So around 1846 and 1810 are key levels. We'll move over to oil. Oil bounced back up. It was in that kind of triangle here, broke the triangle to the upside, came straight back into the previous support level here, which was that massive distribution we saw, Great shorting off that last week. We open this week at a point of support, potentially becoming resistance. And I think some day traders are going to be looking for turnarounds to potentially go re-short here on oil if it can. For bulls, you just want to see it break through here. More importantly, get through that one, because if it does, that then will most likely be bought and picked up. At this stage though, oil is still in a bit of a downtrend, at least on some of the larger time frames. So be careful out there with oil. It's a lot of manipulation and huge games being played in the oil market. Like the flow of money, it's net outflowed recently. It's very, very, very geopolitical. You've got to be very scared, I guess, being in that market right now in some ways. Let's move over to Tesla and talk about what's going on with this stock. Pretty lackluster. I mean, it went up 4.5%, but as we know, Tesla can do better than that. It didn't quite make a new high. There was no new peak. So traders this week will be looking for a new peak so that they can move towards the next resistance, which is around that $790 range. We do have the big defended kind of area now down at 620. We've spoken about that a lot. We've got the kind of beginnings here of a pretty nice lightning bolt towards the upside. So big change of trend there. And everything really started looking a lot better once it got through that 700, 690 area. So Tesla this week, if the market goes up to fill some gaps, we'll take a look at it in a moment, could easily get back up into this 790 and possibly even go towards this gap that's left of its own, which is about 850 previously. So Tesla still looks a little bit bullish here on the charts. Let's talk about though what's going on in terms of real money transactions in the market behind. A lot of you don't consider this, and I think this is something that we do well on the channel, which is discuss whether it's a risk on or a risk off from the market perspective. Here we have value versus growth, and you'll notice that value has been really doing okay versus growth ever since that blowout that happened at the beginning of the 2020 big bull run. After that point, value actually was kind of outpacing. And of course, 2022 has been all about value and certainly not about growth. Guess what? That changed recently with growth outpacing. So of course, value going down against growth. And this has been the story of a long time now. So if we actually look at the charts, you'll notice value has been a horrible investment now for well over a decade. Turned good. Looks like it's having a little bit of a sleep here at the moment with growth outpacing it. Another way you can look at this is QQQ versus SPY ratio. We've done this a lot. Nice breakout here at the end of last week in terms of we now have the change of trend. It looks like we now have a bit of a pickup, and we may see, if we get a rally here, value continuing to, or at least growth continuing to outpace the SPY, so NASDAQ to outpace it. Here's how we came to that conclusion. You'll see the trend line that's been holding up now for 2 decades, and at this stage, it tends to be still holding. XLY, XLP is another way of doing it. Again, consumer discretionary versus staples. This is risk on versus risk off, another strong number. And I can tell you at the time of this recording, the bonds traders were also coming with the market, if you have the right indicators, in terms of that move that we saw on the Friday was actually, really compounded by the bonds traders also coming with that move, which is a positive sign. If they weren't, we would be certainly much more bearish here on the current move. Let's talk about the Russell. So the Russell has 2 big gaps to fill. Of course, this was the one that got the rebalancing. Now, here's the important thing about the Russell. It's left behind a gap here, which you're going to start seeing in all of the markets. Pullbacks down to this level could be purchased back up, because this is going to be an important zone. You've got previous little bit of resistance, you've got a gap that's left there, and you've got a currently higher, higher, low kind of market. So if the market does come back, could we find buyers around these gap zones? It seems like that is certainly possible. You'll notice the big volume coming in at the end. And if we go to the daily here, again, you'll see it was a pretty large volume day. And so was really all of the days down here, which shows us that possibly the street was doing a little bit of sneaky purchasing without our knowledge, or at least we did have the knowledge here on the channel, but we were obviously seeing this manifest itself in prices. It's consistent with the volume. It can mean, in Wyckoff's terms, the law of effort. So basically we have a very similar amount of effort, or very large amount of effort going through here, which basically means that the big traders, the big investors are possibly purchasing, and of course the smaller investors are selling into them. Let's move over to the NASDAQ. NASDAQ very strong here, filled the first gap easily, through the Friday session. In fact, it opened at the top of that, began a new one, which it's now left 2 behind here. So you'll see this is the story. We've got 1 left here and we've got 1 left here. So what could happen? Something like this in the future. Yeah, that's often what does happen. And for bears, they'll be waiting for those types of things and possibly even new lows at that point. But we have another gap to fill. And of course, we've got our previous huge level of supply or support, demand area coming up. And this area should become supply. So we're probably going to see a few people trying to sell around here. And if the market does get up, that's still a lot of percentage this week. But if the market keeps ripping and doesn't come back for these gaps,